Let's take a look at the overall process of recording transactions, how we analyze and how we record them. First off, an exchange of economic consideration between two parties is how we define a transaction. Transactions can be external, they can occur between the organization and an outside party, or it can be an internal transaction, something occurring within the organization. The overall accounting system identifies that a transaction occurred by using source documents, such as a sales invoice or a bill received in the mail. A source document is something that indicates that a transaction occurred. That transaction is then analyzed to determine what accounts were affected by the transaction, and then we enter that transaction into the accounting system through what we call an entry in a journal entry. That journal entry is then transferred, and that journal entry is telling the accounting system what accounts need to be changed. And that journal entry is then transferred to the specific account in a ledger, causing account balances to change. The ledger is where the account records are maintained. And then finally, the last step in the overall accounting system is to ensure that journal entries are properly transferred to account records by preparing a trial balance. And it's just simply a list of accounts and their balances to make sure that everything is in balance. So a couple things we need to talk about. First is, what is an account? An account is a record of any increases and decreases to a specific asset, liability, equity, revenue, or expense item. Okay, so the account is a specific record for each individual asset, liability, etc. The general ledger is a record that keeps track of all accounts, all asset records, all liability records, all equity, revenue, and expense records. Think of the general ledger as a filing cabinet, and it contains all of the accounts that a company uses to keep track of its assets, liabilities, and equity items. Remember, we keep track of different assets, cash, supplies, accounts receivable, equipment, in separate asset accounts. We keep track of different liabilities, accounts payable, notes payable, wages payable, in separate liability accounts. And we keep track of the different aspects of equity, owner's capital, owner's drawing, revenues and expenses in individual accounts. The general ledger is the record or the filing cabinet of all accounts used by the company in its accounting system. Here's an example of a chart or a list of all the accounts that a company may use. Now, every company will have its own account names and a unique number assigned to each of those accounts. Generally, these are a lot of the same types of account names that all companies use, but they are not specific to any given company. So a company can call their accounts really whatever they want. Okay? But notice that each account has a unique name and a unique number. Okay? It just helps in keeping track of the different types of assets, different types of liabilities, and the different equity accounts if they all have a unique name and a unique number.